Welcome back, YouTube. So today we're going to do a price update to find out, get an idea of where that liquidity is for our coins here. We're going to take a look here at Bitcoin. We're going to take a look here at Doge, Ethereum, Cardano, and see where that liquidity is resting, and ultimately what kind of movement can we expect coming up next. So we're going to start off here with Bitcoin. We see a slight rejection here off for like the mid 30 range, not the mid 30 range, but 30,700 roughly. We see a drawdown here. We're back down to the 14-day moving average, and we'll see if this will hold up, because technically speaking, we've been trending along it, and the 14-day MA has been almost like a level of support here where we've been able to kind of catch ourselves. We had some slight rejections below it, but typically we've trended right along that area, and we've been able to find liquidity along that area since we were around the mid 20s, like the 26,000 range. We've been able to find liquidity at that 14-day average. So that is going to be kind of a crucial point here to determine if we're going to maintain that 30 mark. And the last time we talked about RSI and stuff like that, because we know Bitcoin is no stranger to overshooting RSI and going well above that 70. But we will say that the last few times, it is often more respected than it is disrespected, right? So if we take a look here, the last 3 times, the 70 level has been respected, and it was respected this previous time too. As soon as we hit it, we saw this. We hit it back here in, was this March 17th? And then we kind of had some sideways movement. We tried again, and then another rejection here. So for the last 2 times, and then again back here on February 17th, we tried again. So the last 3 times, that RSI, that 70 level has been respected, and we were able to kind of accurately predict almost a retraction here to regain some liquidity. Now the question is, where is that liquidity going to be before you're able to retest again? Because technically on our side, sometimes they go from extreme to extreme, because you'll see after the February mark, we had the full correction all the way back down to around 30, and then we went up and retested again. But we didn't have that after the that March 17th rally. We kind of just went down to like the high 50 range, and then we retested again immediately. So apparently that wasn't enough liquidity to kind of go ahead and break above the 70 mark, or get us to maintain the 30 level, because right now we're at around 29,513. I wouldn't call that like a failure at the 30 just yet, but ultimately we'll have to kind of see where this candle closes. This is a daily candle here. So we are looking at, we're roughly at the level where we last gained that liquidity. So pretty much if we don't hold this level where we are right now, I'll say probably another $200 as we break below this 14-day MA. We may have to go back down here to around that 27 mark to gain some liquidity and see, because we found it there so many times before over the last few weeks. So if we don't have any at this higher level at the higher 20s, we'll possibly have some there at around the mid 20 range here based off of history. And of course, that is going to be like our safety net, because if we break below that, then of course we're looking at some gaps here that can potentially fill to the downside. So we have a little bit of cushion here as of right now. We can kind of track this over the next 2 or 3 days, but as of right now, we have this cushion here at the 14-day MA, and if that doesn't hold up, we can kind of see if we're going to have liquidity still there at around the low 27 range for Bitcoin. That'll kind of give us an idea as far as how that's lining up. Let's take a look here at Doge. Doge is following this trend line that we kind of laid out last time. It has pretty much been putting up consecutive green candles here and putting ourselves, if we close above it, last time we got a rejection off of the 10 mark. So it's kind of great that we're building up this momentum. The question is, will it hold? And what we're looking at really is, we're roughly in the mid-range for RSI, like around the 51 mark, and we did get a rejection back here on April 6th, right? And this is kind of similar to Bitcoin. We didn't have that extreme to extreme. We went kind of midway, and we're going for a retest now. But unlike Bitcoin, there is some room here to go up before we hit that 70 mark and bump our heads again. So we could see a rally of 10 cent again, or at least close to 10 cent, before we start saying, okay, are we going to retract off of that 70 level? The last 3 times really, we want to say 4, we got to bounce here around 64. 3-4 times for Doge, that 70 mark has been respected. But again, it's crypto. It's nothing for it to blow past those marks, that 70 indicator. But this was kind of a unique situation. This was a purchase of Twitter by Elon. So, that's kind of to be expected. But the last few times, more often than not, it's respected. Even if you look back here on August 15th, it's respected. So you can kind of put that into your notes to say that we do have some room here to the upside before we can start to consider saying that, okay, we possibly could have a breakdown, or, maybe Bitcoin can, if it needs to grab liquidity from a lower level, maybe it'll affect their market and kind of, drag everyone with it. We'll see. But overall, this trend has been respected since April 8th, and it's been chugging along right as we planned it out. It charted out in our last video. So we're due here, probably in that same 2 to 3 day time span. We're due here to kind of see if we're going to bump our head here at the 70, or if we're going to be able to retest that 10 mark for Doge. So all in all, that is looking great. Let's take a look here at Cardano. Cardano's on a nice run, filling up that, literally just bouncing off of and taking off of that 14-day MA. And the same thing here, this overshoot here on the RSI. And now you see immediately it's coming back in, which is done on the last time you were here. It bounced off a few times, but typically you'll see that it's not that huge overshoot that you'll see with like a Doge or a Bitcoin. So when you get around the 70 mark, typically this is has a high probability of being respected, and you're probably going to have that cool down period, which is what we're seeing right now. But this is comparable to Bitcoin, and that 14-day MA, Cardano's been riding it, has been able to find support there. So this here can mean possibly a cool down to around the 41 mark, about 2 cents. That's not the end of the world, because you see here we came down, consolidated to the MA a few times, and then it gained momentum, was able to find liquidity there, and then pick up from where it left off. So not the end of the world, but it's just saying that based off of what I'm seeing here on the MA level and the RSI, both of them kind of point to we can have that cool off period. And if you look here as well, you'll see it's kind of right where we retested around the 43 mark. And you'll see there's got a few bounces there. Next in line would be 48. So possibly if we come down and we gain some liquidity here at our off of this 14-day MA, we can probably retest that 48.50 range on the next run up, if all. I guess a little bit of optimism here for the entire market. On the optimism side, those are going to be the levels there. 10-cent Dogecoin, a 48.50 Cardano, and Bitcoin maintaining 30. So let's take a look here at Ethereum. Same thing, riding that 14-day MA. We are 2078, cooling down off of the 70 as well. A little bit of a double top there. So try to gain some liquidity and break out, but ultimately consolidating back down. Let's see. Yeah, because it gets really choppy over here. What's the next level? The 2167. Same thing, we put in a position here. This is a little bit of a steeper drop though. If we are going to gain that liquidity from the 14-day MA, we're looking at around 1955. So a little bit over $100 drop for Ethereum if we need to gain that liquidity, but it wouldn't be too surprising here because we have 2 giant candles here that can indicate a gap up. So if this fills to the downside until we were able to retest this, the 14-day MA, that wouldn't be completely abnormal. But same thing that we've been seeing here consistently today is this 14-day MA has been acting as a liquidity pool for these crypto, and they've been able to kind of bounce off of that and go find momentum. On the hopium side here, we're looking at about like a 2172, and after that, it's a really big candle up to around 2009.56. So I'd say let's show some strength here and maintain like that 2100 mark or so before we start talking about $800 gap ups and stuff like that. That can correspond with what we're seeing with Bitcoin if we're able to maintain that 30,000 mark and grab that liquidity that we need, and then retest like that mid 30 range, then it's certainly not possible. Not impossible for us to see that run in Ethereum as well. So, but as of right now, all indicators are pointing to a consolidation period, except for Doge. Really, there's a little bit more room for Doge to kind of go up and retest. But overall, across the market, we're looking at a slight consolidation here. We may have to kind of reach down and grab some of that liquidity before we go up and retest some of those levels. So with that being said, that is my price update. I appreciate all of you. Like the video, share the video, subscribe to the channel, and I will see you guys in the next one.